Welcome to my channel. Let us do some learning. Minute by minute breakdown. Look at this chart carefully. One company is exploding because of AI memory demand, while the other is moving more steadily with AI chip momentum. But hidden inside this graph are warning signs most investors completely miss. Today we're breaking down Micron, ticker MU, minute by minute, comparing it with AMD, and explaining what this market movement actually tells us about the semiconductor industry. Section 1. First, let's understand the chart. The blue line represents MU, Micron Technology. The green line represents AMD. This is an intraday chart, meaning it tracks price movement throughout the trading day. At the top left, we see MU trading around the mid-700 range during the session. Now notice something important. AMD's green line moves smoother and more stable, while MU's blue line is much more volatile. That tells us investors are treating Micron as a higher-risk, higher-reward AI play. Section 2. The early morning drop. Let's zoom into the beginning of the trading day around 9:30 a.m. Right after market open, MU suddenly drops hard. You can see the blue line falling rapidly from around the 730 area toward the 717 range within minutes.
Why?
This usually happens because traders are taking profits after a strong rally or reacting to concerns about valuation and future growth. Meanwhile, AMD also dips, but notice the difference. AMD's decline is more controlled. That tells us Wall Street currently views AMD as slightly more predictable compared to Micron's highly cyclical memory business. Section 3. Now watch what happens between roughly 10:30 and noon. MU begins recovering. The blue line starts climbing back gradually after the sharp sell-off. This is important because it shows buyers stepped in aggressively. Why would investors buy the dip? Because Micron is deeply connected to the AI boom through HBM memory, high bandwidth memory. HBM is critical for AI chips made by companies like NVIDIA and AMD. So, even though traders are worried about short-term volatility, long-term investors still see strong AI demand supporting Micron. Warning Section 4. Now, let's talk about the big warning box on the right side of the screen. This section highlights several fundamental risks for MU. First, DRAM pricing down 10.5%. Memory prices move in cycles. When DRAM prices fall, Micron's profit margins can shrink quickly. That's one reason MU stock can swing so violently. Valuation: 32x forward PE. This means investors are paying a premium price for future earnings. In simple terms, Wall Street already expects huge AI growth. If Micron disappoints even slightly, the stock could react sharply. HBM ramp: $1.2 billion capex. Micron is spending massive amounts expanding AI memory production. That's bullish for future growth, but expensive in the short term. Negative free cash flow. The chart mentions negative free cash flow. That means the company is currently spending more cash than it's generating. Investors tolerate this when growth is strong, but it still increases risk. Section 5. MU versus AMD comparison. Now here's the key difference between MU and AMD. AMD sells AI processors and computing chips. Micron sells the memory needed to power those AI systems. So AMD is more like the brain of AI computing, while Micron supplies the memory system. AMD tends to get higher investor confidence because chip demand is easier to predict long-term. Micron, however, operates in a cyclical memory market where prices can swing dramatically. That's why MU often experiences stronger rallies, but also sharper corrections. Final takeaway. So, what does this chart really tell us? It shows that investors are excited about Micron's AI future, but still nervous about valuation, cash flow, and memory pricing risks. AMD appears steadier. MU appears more explosive. And in the AI race, both companies are connected because powerful AI chips are useless without advanced memory. The real question for investors now is, can Micron turn AI demand into sustainable long-term profits?